Hi, welcome to the Rooming and Co-Living Investor Summit. My name is Peter San. I'm going to be taking you through this training. And look, wherever you're from, I want to welcome you here, and you've made a really smart decision in having a look at this investment, because in the 40 years since I've been investing in property, this is the best cash flow positive investment that I have actually seen out there in the marketplace. Right? And what I want to do is give you the best information so that you can make an educated decision whether or not this investment is for you. But if you want to supercharge your retirement and invest in your self-managed super fund for a tax-free income, this is a perfect investment for that. Or if you simply want to get some tax breaks and pay off your home mortgage faster, again, this training will explain everything, how this property can help you achieve that. And look, if you have any questions at the end of this, just write them down, get a pen and paper, and we can answer them at the end of the training. But in the meantime, let's get right into it, and I'll see you there. Fantastic. I'm still here, just shrunk a bit, bottom right-hand corner. So let's talk about how we can get up to 8 to 12% returns guaranteed for up to 5 years, plus instant equity and growth with this fully managed investment for you. Now, why is rooming, and I'm also going to call it co-living because some people know it as that, the best investment in 2025? Well, look, if you put $250,000 to $300,000 investment in a rooming house, you can get up to $1 million or more profit from the income and capital growth in just 10 years, as well as positive cash flow income for the life of your investment. It is really the best investment you can make in 2025 and 2026. Now, of course, the biggest problems with property investing in Australia today, until this particular type of investment, is that as property prices were rising, the returns have been dropping, and it's getting harder and harder to get into the property market without getting into very risky debt, negative cash flow, and obviously risking your whole investment. So if you had to compare cash versus the rooming house returns and growth, if you put $250,000 in the bank, right, for 10 years at 5% interest, cumulatively you're going to have around $407,222. If you invest the same $250,000 to buy an $870,000 rooming house, then you can make up to $870,000 capital growth based on the average price in Australia doubling every 10 years. Plus, you're getting the 10.4% and more returns each year on top of that. So if you compare a normal house, like a normal house and land, that one costs $790,000. It's in the same suburb as one of our rooming houses. And that's going to return you 3.6% or $550 a week. And it's only around $80,000, $90,000 cheaper than the one here, which is $870,000. And it gives you 10.46% return and $1,750 per week rent. And it's guaranteed. Now, the other property, the one that's making $550, that was only a 4-bedroom, 2-bathroom. Here you're getting 5-bedroom, 5-bathroom, 5 living rooms. We'll talk about it later. But when you compare those two, obviously it's a no-brainer as to where you'd rather invest your money. Let's have a look at actually in a suburb and see how it looks like. So behind me, I've got 2 properties in the same suburb, right? Now, this one is a normal house and land, which will rent for $500 a week. The one next door to it looks exactly the same from the outside. However, inside is 5 separate bedrooms, 5 living rooms, 5 bathrooms, 5 kitchenettes, 5 courtyards, and that one is going to rent for $1,750 a week. Now, from the outside, you can't see any difference, but the big difference is what's on the inside, and of course, the returns you're going to get. So one house, $500 a week, second house, $1,750 a week, which is for this property right here. That is the difference between a rooming house and an ordinary investment. And this is guaranteed for 5 years. So if you're interested, give me a call. Okay. Don't call me just yet. Make sure you watch the rest of this training just to get educated on exactly how it works. So the other rooming house ownership benefits is that you pay less tax because you got larger depreciation tax benefits because of the obviously 5 bedrooms, 5 bathrooms, there's more fittings, plus it's includes furniture. So you get better tax benefits. You can also pay off your non-tax deductible home mortgage a lot faster because of the positive cash flow you're getting from this type of investment property. Now, 2 rooming houses can give you up to $150,000 or even more net income in your retirement. And as well as that, it's increasing each year with inflation. So the benefit of this type of investment is that it keeps up with the inflation. If you keep your money in the bank, yes, you're getting some interest, but the value of your money in the bank is getting less and less every year because of inflation. So even if you just own one rooming house inside a self-managed super fund, you're going to get a $75,000 net income, and capital gains will all be 100% tax-free when you retire if you invest in your self-managed super fund. Now, here's me in that photo in Miami last year with basically living on income from our retirement properties that I've got in my super fund. So that was totally paid from the income that I got from my investment. I've got one here in LA Beach in my super fund, and it cost me $845,000, and the net income was $97,000 per year, and it's completely tax-free. That's why you need to invest in your self-managed super fund as much as you can, because later down the track, when the chickens come home to roost, so to speak, all the income is tax-free, and you can get rid of paying all that stupid tax. So who benefits most from a rooming house investment? Look, if you want a higher return from your current equity or cash, and also you're looking for capital growth, then this is the perfect type of investment for you. If you have cash in your super fund and you're looking to get a very safe, higher returns and capital growth within your super fund and have the tax-free income down the line, then again, it's an ideal investment. Or if you simply want to secure your retirement, and have a substantial income and pay off your home mortgage faster and pay less tax, then again, this is the perfect investment for you. So what I'm going to cover here and what you're going to learn is basically the 8 major benefits of rooming house investments. What is a rooming house and who are the ideal tenants? What are the costs to run a rooming house? Which areas will give you the best rental returns and capital gains? And the 5 biggest pitfalls to avoid when choosing a rooming house investments. Look, it is a bit of a minefield. There's a lot of people advertising, all types of rooming houses with all types of return, but you got to be careful about what type of a rooming house you get involved with, and I'm going to cover that later. Make sure you stay with me because that's a real big one. So before I do that, who the hell am I and why should you even listen to me? Well, I'm going to share a little bit about my property background with you. My parents actually taught me that property is the best investment. They both worked in a normal job, didn't have any high-flying businesses, but they're retired multi-millionaires because of their real estate decisions. For example, this house in Kensington, they bought that one for $65,000 and sold it for $152,000 5 years later. This one was in Bellevue Hill. They bought that one for $167,000 and sold for over $1.2 million 11 years later. And that enabled them to retire and obviously live a really good life in retirement. Now, my own property investing history is I bought my first investment property when I was 24, back in 1984. And I purchased 24 more properties for myself since then. And I also hold a current real estate agents and auctioneer license. And people sometimes ask me, well, what's in this whole rooming house deal for you? Well, if you buy any property that's out advertised for sale, then obviously the agent gets a commission on the sale of their property. So basically, we work exactly the same way. We get paid by the developer or the person that's developed and built the property, an agent's commission, just like you would if you're buying a property in your suburb down the street. Some of the other properties I've owned investment units, townhouses, house and land, both in and out of my super. And I've also invested in NDIS properties, multi-tenancy co-living homes, as well as Airbnbs and even overseas investments in Bali and USA. Now, different times is different types of properties are better to invest in. NDIS was, for example, good a few years ago. It is now getting a lot tougher, and you've got to be very careful about where you invest in those types of properties. But the rooming houses, I'm actually going to be selling one of my properties to get into the rooming house investment because of the returns it is getting, and it is the right property for the current climate we have in Australia. Now, I've done a lot of research to come to these conclusions and to actually invest in property. I've written a book on boom suburbs, how to find the high growth areas for maximizing capital gains before anybody else does. So we do a lot of research into where is the best place to invest in. I've also written a book on how to sell or rent your home faster and for more money. And that's important when, market gets a little tougher and you want to sell your property and maximize your returns. Also a beginner's guide to building your wealth with NDIS property. And also, I'm just finishing this one, which is creating wealth with high return real estate and how to retire financially secure with tax-free income, pay off your home mortgage faster and reduce your tax with property. And this is going to relate to the type of properties that I'm talking to you about today. So this is one of my students, and look, John's done really, really well. I've known John for many, many years, and he was just a struggling family man, and he's gone to a very, very successful real estate investor, and he's one of the clients that I've had over the years. I don't take on a lot of clients because most of the investing I do for myself, but the clients that I do work with certainly like working with us, and here's what he's got to say.
Hey there, guys. John Gian here. First of all, I want to congratulate you for actually turning up today. You know what? Success is really, really easy. Sometimes you just have to turn up. I first had the opportunity to bump into some of Peter's information about 12 years ago, and since that period of time, the revenue that I've generated, I can attribute to those early beginnings with Peter, which is in the multiple millions of dollars. If you really sit there and can really get it and see how it applies to your life, let me say this to you. I know this is going to be a big statement, but you will never be broke again. If you really sit there and you embrace this information, that's a big call. You'll never be broke again. What Peter's Techniques has enabled me to do is grow a really quick business, fast profits, and then I've rolled that into real estate. So I've had the opportunity to live an amazing lifestyle, travel first class, 5-star hotels, latest model Mercedes, live in multi-million-dollar homes, but still have enough money to put into real estate and build a massive real estate portfolio as well. So my system is business, put stuff into real estate, right? And that's how the billionaires do it, the multi-millionaires do it, and that's how I suggest you do it as well. So thanks for giving me the opportunity, Pete, to shoot this video.
Okay, so obviously John's a very successful, investor and business owner. But let's have a look at somebody else who's just basically starting out in the investing field. And Nessie, she lives on the Gold Coast, and she just made her first property investment. And this has been what she's had to say.
Hi, my name's Nessie Rose, and I'm a single wage earner for whom property investing was a bit of a scary experience for me. I've known Peter Sun for over 15 years. Peter has lots of experience in property investing for himself, and this really helped me making my first property investment a lot easier. I was really hesitant. I had no experience in property investing myself, but now I've made over $350,000 profit in less than 4 years, and I am so looking forward to buying another one soon.
Look, Nessie is a single wage earner, and this has been an absolute game changer for her, having this kind of a capital growth in this relatively short period of time. You certainly couldn't save the money you can make with the right type of property investment. I just love property, and you should too. But look, before we get there, let's have a little reality check and the legal stuff. Get that out of the way. Look, the information I'm giving you obviously is for general information and educational purposes. It's not a legal or financial advice. So please make sure you seek your own independent legal and accounting advice relevant to your personal situation before investing in any property. And look, all investments carry both potential risk and reward. So if you get rich as a consequence of attending this event, it's not my fault. It's because you took some action. And I hope that one day, we will get to know each other. We'll be friends. And you're going to be sending me Christmas cards saying, you know what, Peter, I just love that investment that I made with you all those years ago. So let's talk about the 8 major benefits of rooming house investments now. Now, the first one is obviously, the obvious one is higher returns. The separate room rent mean that yields are at least 2 times and sometimes 3 times a neighborhood property of the similar size inside. So the property on the top right there, $1,750 a week. The property down the bottom as well has got 5 bedrooms, 2 bathrooms, very similar in size inside, but you're only going to get $530 per week. These are in the same suburb, right, of each other. They're right next, they could be sitting right next to each other, but look at the difference. Now also, the second benefit is multiple rents. Due to the separate room rents, rooming houses provide multiple income streams from the one house. So basically, you're getting positive cash flow with a lot less risk. So there you can see the 5 different apartments. So there's 1 bedroom, 1 micro apartment, 2nd micro apartment, 3rd one, fourth. Now these are all bedroom, separate bathroom. They've got a little lounge room. They're going to be fully furnished, right? They've got a little private courtyard, each one of those, and a couple of them also they get car parking in the garage. And then there's the fifth unit. Now one of these has to be a handicapped unit, so there's got a wider doorway, so wheelchair accessible. That's basically the law from the government. So one of these will always have to have accessibility. And then you've got the common area and the living area. That's where you've got a common laundry, right? A common kitchen that people can use. But we found that very rarely they use that kitchen because they've got their own kitchenettes inside of their individual apartments within that property. Number three is they're much easier to rent, right? Because they're affordable. It's all-inclusive rent, so it includes electricity, Wi-Fi. And look, the current housing shortage just ensures very, very high occupancy rates for these types of properties. And the other thing is you run a lot less risk of no income, because if one tenant vacates, only 20% of the income is lost, with 80% of the income still continuing to fund your investment until the room is released, right? So you don't have a problem with paying your loan and have to put money in your, out of your pocket. Now with a single income dwelling or an NDIS property, which certainly, look, there's still some good opportunities available, but 100% of your income is going to be lost if a tenant vacates or breaks the lease until a new tenant is found. So the rooming house is ideally suited for you if you're a bit short-strapped on cash, right? If you've got money in reserve, some of the NDIS investments can still be very good, but because you can hold the property if you don't have a tenant. But if you're kind of a little bit on, on the edge, then you definitely don't want to be investing in anything where you're not having this kind of income security as these properties give you. Number five, the five benefit is the excellent capital growth these things get as well. Look, rooming houses are generally very tightly held property assets due to their higher than usual cash flow. Investors love these properties, right? Resales of these are always hundreds of thousands of dollars higher than the purchase price immediately after completion, giving you instant equity once completed. Like that property there on the right, it sold in 24 with a 7.9% yield, but for $1,350,000. But in 2023, it sold off the plan for $1,080,000. So we'll go details of that a little bit later, but you get very good capital growth on these. They're also very easy to finance. So banks love them because they bring a guaranteed steady income, especially with the guaranteed rent for 5 years. But it's important to go with a rooming house experienced lender. The normal banks sometimes don't understand these, so you've got to go with a bank that understands this type of investment, because they need to be valued as a commercial investment, not a residential one, because of the income, the higher income that they're getting and the layout inside the property. You also get depreciation tax benefits. New build rooming houses have much higher depreciation benefits than any other assets because of obviously the 5 bedrooms, 5 bathrooms, the fit outs, the furniture. You get more depreciation. And this also results in higher than usual tax benefits, putting more money into your pocket each week rather than giving it to the tax man, getting that nice refund at the end of the year, which we all love to get. But the biggest benefit of owning this type of property is the positive cash flow income combined with the tax benefits and capital growth means that you could now be mortgage-free in 7 to 10 years, plus have a high income producing asset for your retirement and or more disposable income for your everyday expenses. Look, real estate, as it says there, is still the best investment you can make today, and this property can literally set you free from a financial point of view because it's got such an amazing cash flow. Remember, cash flow is king when it comes to property. So let's have a look at what is actually a rooming or co-living house and who are the ideal tenants, because there's different types of properties that claim to be rooming or co-living houses, but they are not all made the same. So rooming or co-living house, it's basically a purpose-built property that will often look like any other residential home on the outside, like the 2 homes I showed you earlier, but on the inside, they're fully furnished private studios or micro apartments, each approximately equal in size, plus a common kitchen and laundry area, all under the one roof. Right? So it's a basically it looks the same from the outside, but inside is a very much different story. Here's an actual walkthrough of a rooming house that I've actually been inside, and that's about to get finished. So let's have a look at what that looks like inside. Okay, this is another great example of a room in a rooming house. Again, we're coming from the common area, which is the kitchen laundry, which all the residents use. Then you've got a doorway into one unit here, and then we've got a here, and it's like a micro apartment really. Look, you've got a courtyard, you've got a clothesline, so you've got your own clothesline here. And then you've got a kitchenette, you're going to have a laundry. It's going to be fully furnished. It's going to be beautiful big TV on the wall, lounges, beautiful type of furniture. You've got your cooking, you can put your cooktop here, you've got a room for a fridge. Then you've got a completely self-contained bathroom. And again, it's very functional, right? And for these, it's better quality than most of these that you see out in the marketplace. And you've got a bedroom, which again, good size bedroom. You can fit a queen, even a king size bed. You've got a wardrobe, very large wardrobe, shelving, lots of place to put their clothes. So people can just basically move in. Plus there's 3 car spaces right at the front of the building. Now these rent anywhere from $410 to $425. Okay, now this one was actually in Brisbane. And Brisbane has had these rooming houses for a couple of years now. And they are a lot more expensive than the one I'm going to show you later on. Right, but they have certainly been a fantastic investments for anybody that's made an investment. And in fact, John, the one who you saw the testimonial before, he actually invested in 2 of these rooming houses, and he's done very well with them. So let's have a look at a rooming house, typical rooming house floor plan, what it actually looks like. So you've got basically single level with 5 studios, and it's 5 times rental income. So you've got the bedroom is there, then you've got the living area, which is separate from the bedroom. Then you've got a kitchenette, which is in the living area. You've got a private courtyard, and you've got a private bathroom. So that's one apartment. Then you've got the second one, same thing: bedroom, lounge room, private courtyard, kitchenette, and a bathroom. So that's unit 2. Unit 3, same thing. Unit 4, same thing. Unit 5, same thing. So they're identical. They all have the same, virtually the same size. They might be a little bit different. Smaller in a couple of them, the corner ones, but they're virtually identical to each other. And then you've got the common area, which is you've got the laundry there, down the bottom left-hand corner. You've got a communal kitchen and a communal living area or dining area, which is there at that arrow. So let's talk about who are the sort of people that will want to rent these types of properties. Look, residents of rooming houses are from a very diverse range of society profile, increasingly comprising of individuals such as healthcare and emergency service professionals, essential workers, divorcees, and notably single women above 50 seem to love this kind of accommodation because it gives them privacy and independence within an affordable accommodation option. Now, each resident actually signs an individual lease agreement just like any other rental property, usually there for 6 months or more. We'll talk about it, and they get the private use of the furnished bedroom, the bathroom, kitchenette, and courtyard area that they're going to occupy. And the lease agreement, as I said, is normally for a 6 or 12-month period. And it's going to include things like bills, electricity, cleaning, and internet as part of the agreement. Now, it's also going to include the use of the communal area, such as full kitchen and laundry. So down there in that photo, you can see that's actually a common area. It's got a full kitchen with an oven and dining table and a laundry up there. And that's the part that all the residents can share. However, with the designs of our rooming houses, this area is very rarely used because everybody can actually be self-contained in their own apartment because it's got all the things in there already. So let's have a look at what are the costs to run a rooming house, because there are a couple of more costs than a normal property. Like if you have a normal 5-bedroom, 2-bathroom property you're renting to a family, there's going to be a few extra costs. You've got the letting and rental management costs, and you've got the regular outgoings, right? So that's something that's different to the normal property. So management costs can range anywhere from 7.7% to 11% of the rent collected, and this includes the rent collection, regular inspections, plus end of year financial statement. Basically covers everything to do with the management of the property. They'll handle it all. You can see all that condition report, routine monthly 6 monthly inspections, right? And the statements every month when you're getting your returns and so on. Now, the initial letting fee is normally 1 week's rental, and it covers the lease preparation, inventory, condition report, tenants reference vetting, and so on. Then your regular outgoings are things like electricity, water rates, cleaning, garden maintenance, insurance, internet, council rates. You can see them there on the right. But if you want a percentage, generally the costs deduct about 2.2% from the gross yield. So if the gross yield is, 10% or 10.5%, then the net will be just above 8%. Or you can take 21% of your gross rents received if you want to do it in the monetary terms. So you deduct 21% of the rentals that you're getting. So here's an example of one of our 5-bedroom rooming house outgoings and return on investment, or ROI, that you're going to get. So the investment is $870,000. The gross rent is $91,000. That's 5 little micro apartments, $350 each, which is 10.46% yield, which is guaranteed for 5 years by the developer and the property manager. The expenses will be $19,042. So as you can see, that's a little bit more than just paying for, the rates and that you normally pay with a normal house. However, your net income is still $71,958, which is 8.27% net yield. That is literally unheard of in any quality property in Australia today, right? You have to go overseas and invest in all kinds of risky investments when you can get it right here in Australia with this type of investment. Now, even better still, even after you pay all your interest, right? So you take that net yield, 8.27%, less your interest on an 80% loan. Now, we're going to have this one at a slightly higher interest rate because, we want to be conservative. So $696,000, which is 80% loan, at 7.2% is $50,112. So your net income is going to be $21,846 or $420.11 per week. Now, how would you like to get an extra $420 in your pocket every single week to either pay off your home mortgage, right, or just spend it on things that you want for your family, save up for a holiday? I mean, this is fantastic cash flow. And this is your net income after all costs and loan interest is paid. Plus, you're going to get some depreciation tax benefits. We're not even talking about that. Right? Your accountant can help you out with that, but that's going to be worth thousands of dollars per year more on top of that. So here's the rooming house. If we extrapolate it now to 10 years return on investment, so you're going to get that $21,000 per year net rental income for 10, times 10, which is $218,460, plus the 10-year capital growth, which what Australian properties normally double every 10 years, which is $870,000. So total income and growth that you could potentially expect is $1,088,460 in 10 years' time, as opposed to that $400-something thousand if you keep your money in the bank. Now, obviously the returns could vary, but this is based on Australian historical property growth. And this doesn't even include any rent increases because all the rents are tied to CPI. So the rent return is going to keep getting higher and higher every year as well. So let's go down, and point number 4 is which areas will give you the best return and capital gains. So we're going to look at what is the best options. Now, I've written a book called Boom Suburbs, and what we look at is what we call the Boom Suburbs indicators, which is 14 identifiable and data-driven market movement indicators. So these are signs that'll give you an indication that a property price is likely to rise in a particular area, right, as opposed to other areas that you might be looking at. So the first one is supply and demand. Now, this is what's been driving the property price boom in recent years all over Australia. The population and tourism growth versus number of properties available for sale and for rent is basically out of kilter. There's too much demand, not enough supply, so the prices are going up. The second one is rental vacancy rates. So if rental vacancy rates for available properties fall below 2%, then the shortage of those properties for rent coupled with rising population forces rents, and then the property price is up as a result. So that's the second one we look at. We look at property rental yields. So we got gross rental yields rising about 4.5% for houses and 5.5% for units in capital cities, or gross yields rising about 6% for regional areas. And there you can see there that regional Australian prices are reaching record heights, and this is just in February 2025, and that growth in regional areas is outpacing the capital cities because capital cities are simply getting too expensive. Look, you could buy a rooming house in, say, Brisbane or even Sydney, but you got to add up the cost of the land plus the building cost. The building cost is around $600,000 to $650,000 for one of the designs that I'm showing you. So if your land cost is $1 million, then you add $650,000 on top of that. Obviously, that will halve the return you're getting. So that's why the regional areas are obviously a really great opportunity, because our rooming houses are getting up to 10.4%, 10.46% and more gross yields in some high growth regional areas. There you can see that on that brochure. And it's guaranteed for 5 years. That's how confident the developer and the property manager is that this return is sustainable. And in fact, it's going to get higher over time, that they're willing to guarantee it for 5 years for you. The other property price influencers are infrastructure. So infrastructure and transport projects planned or under constructions, like things that are going to bring people into an area that will enable people to get there. The other thing is major projects, shopping centers, hospitals, universities and schools. All this stuff will mean higher prices as people move into the area and the demand increases in that particular area. The best areas to invest in, look, we've got some great opportunities in Queensland, Victoria, and also Western Australia. But however, the most affordable and the best returns at the moment is in an area that we've identified, such as the Ballarat region in Victoria. That's the little snapshot there where the hospital is being built as a huge extension of a hospital, couple of hospitals there. And then the staff for that hospital needs to be housed. So we're going to talk about it later. But we've used our boom suburbs, criteria to identify certain areas where you can get very good returns right now. So the example of Ballarat infrastructure spend is the Ballarat-based hospital has just had $655 million spent on it. They're just building it right now. And 19.2% of Ballarat workforce is actually employed in healthcare. Right? It's a huge employer. And they need staff to come into that area all the time to obviously service that demand. And they need to be housed. And this is where these types of properties are an ideal situation in terms of being an opportunity for you to invest in and for the hospital to be able to get their staff in there. So that's where the hospital, as you can see there on the right, and the accommodation is just like 6-minute drive from that hospital, which is really great. I've actually just come back from Ballarat, and so this is just a little bit of a recap on that hospital expansion. This is where we're going to have the nurses and the doctors who are literally going to be living. It was about 5 minutes, 6 minutes on a quiet morning or in the evening. I just took 8 minutes to get here from one of those rooming house sites, and it's the one that's right near the shopping center as well, so it's super convenient for these employees, going to be working here. And this is the actual hospital. That's the new $650 million extension of the Ballarat-based hospital, which is right behind me. And that's going to be where the new staff are going to be going in and looking for that accommodation to those rooming houses. It's a huge extension, and the hospital is already big. And there's another hospital right next door. So this is going to be the next development that's happening here. It's going to bring all the population and also the doctors and the nurses that are going to be taking some of those rooming houses that we got available.
Here's a little mock-up of the actual construction. Imagine the staff they're going to need to run that.
So there's a lot of infrastructure just in that hospital, but that's not all. As well as that, they're putting a Melbourne airlink, which is $10 billion being spent on a direct rail link from Ballarat to Melbourne Airport. Also, the Golden Plains Wind Farm is a $3 billion budget, for that one. Then you've got the Eureka Stadium, $150 million, the Ballarat Link Road, plus there's another $2.5 billion worth of other projects now added up to over $65,000 per person currently living there. That's the infrastructure going into Ballarat. That's why it is such a good area to actually be investing in. And look, we already know that property is the best investment, right? Hopefully by now you're starting to realize that. And it is the most secure and reliable way to build wealth, to invest in income producing properties, because 90% of all millionaires have done so through real estate. However, where people go wrong is when they get into trouble with property, it's one of two reasons, right? They invest in the wrong area. So like the mining towns or the old gold mining towns, that's the really risky areas, because if the mining goes, so does the town. But second one is they can't afford to hold it. So even when it's in a reasonably good area, they might lose their job, their interest rates get higher, they have medical issues, some other personal problems. And if you don't have the income, then you could potentially lose the property to service those loans. So the solution is a rooming house with this 5-year guarantee. It's really a no-brainer, because you've got a positive cash flow property, right? And it's putting money in your pocket, right? Every single week. You are cash flow positive. That allows you to not only spend money on whatever you want, but it allows you to repay the loans and basically pay the expenses of that property. So how much capital can you get with a rooming house? People often ask me, well, but there won't be any capital growth, or will there be capital growth? Well, rooming houses are valued as a hybrid residential and commercial investment, right? And they're based on the income that they bring in is the valuation. Now, historically, I can only go by what's already happened, but historically, once they're completed, they immediately have shown an increase of 16% to 20% increase in their resale values to investors who want a going concern. So once it's tenanted, once it's built, investors are willing to pay a lot more money to purchase that going property. Investment funds, there's a lot of type of investment, of houses that are also looking for investment such as this one. Here's some completed rooming house sales. Now, as I said, these have been active in Brisbane for the last couple of years. The only trouble with Brisbane now is, as you can see by those sale prices there, they are getting quite expensive. These are the resales, right? 1.35, 1.6 million we got here, right? So 1.357. So they're getting quite expensive, because the way that you work on the rooming house values is you buy the land cost plus the build cost. The build cost is usually between $600,000 to $660,000. So on top of that, you got $1 million, say, land cost. Now it's 1.6 million. Now, if the land is cheaper, obviously, that gives you better returns. However, you got to make sure that it's in the right area, and I'll talk about it later, because cheap doesn't necessarily mean good. So these are actual case studies of resales in Mango Hill in Brisbane. 7-8-9% that sold on the 1st of the 8/24 for 1.285 million. That's what a property looks like. Now, it's fully completed. Current rent is $101,000 per annum, and it's had a 23% increase in just 11 months since it was bought off the plan, right? So here was the off the plan purchase, $1,040,000. Rent, as I said, was $101,000. Once built and tenanted, it sold for $1.285 million, which is $245,000 profit. And it was sold with just a gross yield of 7-8%. So obviously, I've had people say to me, but I won't make any income when the property is being built. Well, that is true. But do you want to buy a finished property and pay, $245,000 more? The income you'll lose by building the property, you'll more than make up when it's finished, and you made the profit on the capital equity jump. Right? Because here you're only getting 7.88% yield. You're buying a property with 10.46% yield guaranteed for 5 years. Another one in Bald Hills, again, resale 1.350, $350,000, $1,350,000. This was, again, sold as soon as it was completed. Look, it's not even that attractive from the outside, but the current rent is $106,000 per annum, and it was a 25% increase on what the purchaser paid off the plan in that one. It was bought just like 10 or 11 months before that for $1,080,000 with a 9.88% yield. And again, the yields in Brisbane are lower because the prices are higher, but that's what the property looked like when it was sold there in 23. And then that was the projected rent, which was 9.88% yield. Now, once it was built and tenanted, it sold for $1,350,000, as I showed you before, just 11 months later. So that was a 25% increase and $270,000 profit. So yes, you can buy a completed rooming house property, but you're going to be paying over the odds. You want to be the developer. You want to be the one that gains the equity when you're buying these sorts of properties. You don't want to be the one that's being lazy, basically, and saying, I want to go in concern, or maybe because, I don't know, you think it's safer in some way, but it's not, right? Because you're not gaining the profit that you could have made in building the thing from scratch, which is obviously a better way to go. Now, our Ballarat properties, right, in comparison, 10.46%. This is obviously, these are just being sold right now. We've got 3 of those available currently with these guarantees. 5 bedrooms, 5 bathrooms, 5 lounges, 6 kitchens, because each micro apartment has got a kitchenette, and then there's a common area kitchen. Off the planned sale in 2025, $870,000. Projected rent is $91,000 per annum. It's 10.46%. It's actually not just projected, it's guaranteed, right? Rent, so you know you're going to get that income. Now, based on the past resales of similar co-living rooming house properties in other areas, we've got if you get a 15% increase, well, that property is worth $1,500,000. If it's a 20% increase, then $1,044,000. And if it's a 25% increase, that's $1,087,000. So that's like 8,797,107. That's 317,000 more just for you going through the motions and buying it off the plan and constructing it and then reselling it to somebody who didn't want to go through that process, right? So whilst it might look a little bit more complicated, initially, right, it's actually much better. And a lot of people kind of get scared of this. They're scared of taking a little bit of what they consider to be risk. They want to buy a completed property. Well, guess what? Completed properties have less tax depreciation benefits, right? And the returns are always lower, right? So it's not a good path to go, especially in this sort of property. Now, actual growth obviously may vary, depends on the property and where it is, but based on the historicals, this is what we can expect. Look, in Australia, you're pretty safe with the property. The last 30 years property growth is just gone up, up, and up. You can see the graph there. It's just going up. And again, it's jumped since 2022. Now, there's 3 ways you can invest in these sort of properties. One is equity release. So our team of finance brokers can assist you. If you have equity in your current home, right, and that equity is basically money inside your walls, it's not giving you any income. Well, you can use that to generate income by investing in one of these properties. Self-managed super fund. Now, we can help you set the fund up. There is a bit of a process for doing that, but it's very cheap. It's around $900 to set up a self-managed super fund. So it's extremely cheap to get it. And then you can invest in your own properties inside your super fund. And of course, you can also use cash, where you're not going to need a lot of help if you've got cash. Cash is still king in most parts of the world. So how long will it take for you to start getting an income? And that's another question I often get from people, is they feel like, oh, but I got to wait, while it's being built. Well, guess what? You got to wait if you buy any property, that's not already built, right? But the benefits are, it's going to be a new property, and this is going to be a massive positive cash flow property. So the longest path is where we're starting from scratch. So we actually go out and find the land and build to order. So some clients want us to find a block of land in an area that they like, or a particular type of situation. So that can take anywhere from 10 to 16 plus months to actually complete. So that's the longest. The benefit is you will get equity because you're starting from scratch, but the drawback side just takes a long time to complete, and you've got to obviously fund the process through that period. Now, a lot faster is you buy existing land, and where we already have the existing land, and the plans are already ready for that property, such as the ones that we have, available in the Ballarat area. So this is the co-living and rooming projects that are ready for the investor. Normally takes anywhere from 6 to 10 months to complete, but the benefits are, it's ideal if you're a wage earner that needs tax benefits because you're going to get depreciation. If you got funds in your super fund, you want high return and capital growth, again, fantastic opportunity. The equity, you get instant equity. there's really no drawbacks with this type of investment unless you want to go to the immediate gratification. So basically 1 or 2 months to settle like you would any other property you're purchasing. You buy the finished project. It's already built. It's already tenanted. So yes, you feel all safe and comfortable. But guess what? These properties are so easy to rent anyway that why would you want to give that money away to somebody else? So the benefit is you get an instant income, but the drawbacks are you're paying 20 to 30% more for it. Look at this property here in Brisbane. $1.6 million was the resale. That probably originally cost around $1.2 million maximum to build. So somebody is making a massive, chunk of cash by taking the time to actually go through the process and building it and developing it. And obviously with the rental guarantee, you really got no risk in terms of the income. So you lose on your equity gain. That's basically what I'm saying. And there are also less tax benefits and lower rental returns. So it's obviously going to be harder for you to afford a property like this because it's got the profit built into it. Just like when you're building it from scratch, you want the profit for taking the time to take the, time to build it and to do what we're doing here. So here's another example, finished project. You're paying $1,350,000, you're getting 7.9% in returns, gross returns. Or of the planned project, you're getting 10.77%. It's almost 3% more in return, and it's only $854,000, right? And I believe that these are better designs and they're better thought out than a lot of the other ones that are already out there in the marketplace as well. So look, if you've seen enough, you want to book a time, yes, you can book a session with me with the link underneath this video or call whoever sent you to this video. But I'd like you to stay with me, right? And actually watch the end of this training because it's really important that you get this, that you understand every single nuance of this type of investment, because I believe once you do that, you can make an educated decision you're going to feel comfortable with. And I want to work with people who are comfortable about making the decision to set themselves up financially free and understanding all the benefits and all the risks. So anyway, that's the link is down below, so you can go to it if you want to. But let's just have a look at Steve, who's one of the investors that I've dealt with in the past, and see what he's had to say about investing.
Hi, my name's Steve Pollard. I live on Miami on the Gold Coast. I met Peter at the Oracle building in Broadbeach approximately 4 years ago, where I had an investment property and Peter had investments in the building himself, and I found Peter to give me some very solid advice. Further on, 2 years later, he actually sold an apartment to my daughter, and the investment property that he had put us onto has proven to be quite a substantial win for her, and we're very happy with the service. I think Peter is a very honest person. He wears his heart on his sleeve, and he has guided me very well towards other investments and investment ideas. I hope this is of assistance to you, and I wish you all the very best. Thank you.
I hope you're giving me one of these stories very shortly. And look, I tend to get to know most of my clients that I work with. And in fact, one of my clients who bought a house from me 20 years ago was the best man at my wedding just recently. So I do believe in ongoing relationships with my clients, and we're not looking just buying one property. Hopefully we're going to get you into 1, 2, or 3 properties over the course of the next 5 or 10 years and really set yourself up. Okay, so let's talk about the other side of investing in rooming houses, because there is some mistakes that people make when looking at rooming or co-living house investments, and these are the 5 biggest mistakes that people make. Number 1 is poor location. They invest in an area that's not a good location. Number 2, unattractive design and appeal. Number 3, incompatible or wrong tenant mix. Number 4, the properties are poorly maintained and cleaned. And number 5, they use inexperienced property managers to manage them. So number 1, poor location. Look, obviously, the cheaper the land, your build is always going to be around the same price, $600,000 to $650,000, $660,000, depending on the configuration and the size of the rooming house. But people often will build them in areas where land is cheap because nobody wants to live there, and they build a whole bunch of them, like 10 or 20 together, and then sell it to investors because they say, oh, this is a great idea, because the return looks so great. But if you build too many in one area or in an area where nobody wants to be, then obviously you're going to struggle even with these sorts of products to get the tenants in there, right? And they usually build on very small blocks, like 200 or 300 square meter blocks, 300 square meter blocks. Like this one is actually 512, so that's not bad. But they're only like 3 bedrooms. They don't have the separate kitchenette, separate lounge room, separate bathroom. So that's a mistake, right? Because when the market shifts, you may not be able to get the tenants or decent rent and capital growth like in these really far out regional centres like up north there, right? Which is like, I don't know how many hours drive from Melbourne, probably 6 hours drive. The solution to this problem is, like if you build in Brisbane metropolitan area, you've got to build quality design and size in locations where the demand is high, even at a higher land cost. So in Brisbane, for example, you can achieve rents of $400 to $500 and more are achievable. However, in Sydney, you probably couldn't build these because the land cost is just too prohibitive, right? So there is certain pockets where you can build these and really do well with them, and where the price the price of the land and the demand just has that right point where you can build these and make a really good income and profit out of them. All right. Now the other solution, if you don't want to spend 1.2 million in Brisbane, is something like these ones, which is the ones that I'm talking to you about in Ballarat for $870,000. Ballarat is the 3rd largest town in Victoria. It is about an hour and 15, hour and 30 minutes maximum from Melbourne. There's growth and demand due to infrastructure, rising population, putting pressure on housing, the large hospital accommodating staff. So there you got Melbourne. Ballarat is literally 1.5 hours drive. I just did the drive myself like a week ago. It's the 3rd largest regional city. There you've got the hospital that's being constructed and added to, and there's the accommodation. Literally 6 to 8 minutes drive away, depending on whether you go in the morning or during peak hour. Right, so very handy, and that accommodation is right near a major shopping center as well. So the second mistake is very badly designed and small rooms, right? And I've seen this happen, and I'll show you some examples. So small bedrooms with no courtyards and separate bedroom and lounge kitchenette area will not rent as well or when the market changes. So a lot of these people are letting houses or saying we got co-living or rooming house, but they're cramped. Look at this one. There's like 1, 2, 3, 4, 5, 6. There's like 7 bedrooms in this one, or 8 bedrooms. And there's no, they don't even have, some of them have common, they have a private bathroom. They have no kitchenettes. They have no separate lounge rooms. So they are not as desirable. If you look at that picture down below, you'll see how small the bedrooms are. And these ones have a very high turnover of tenants because they just don't like living in there long term, because they're always mingling with people they don't know in the common areas, or it's kind of a bit of a rooming house ghetto because it doesn't attract the right type of tenant with this kind of layout. Yes, if it's built right next to some university students, they might like this, but not for adults, which is the market that we're going to, because it's a much better market. They can pay more money. These are what the rooms look like. Let me go back to that. You see, these are actually advertised on Flatmates for around $280 a room. So look at that. You can't swing a cat in there. Right? Both of these, they're from the same house. Right? I mean, they're tiny. So this is not what you want in your rooming house. Right? Here's another one. Now, I said it's ugly from the outside. Depends on your taste, but it looks like a bit of a factory unit, as you can see up the top there. And look downstairs. 8 bedrooms cramped into a small internal area. So yes, they all have en suites, but look how tiny those ensuite bathrooms are. Right? You'd be lucky if you can even swing a cat in there. Well, you wouldn't be able to, because they're just tiny. The showers are tiny. Right? People are not going to want to rent them, if they got other options, such as this sort of thing. Because our customer surveys show us that people want and also are willing to pay more for self-contained micro apartments rather than just a room, like such as what you see there, the separate lounge room, separate kitchenette, and a bedroom is all separate. You can see it in the photos there. So the winning layout with the 10.77% return is one of these, right? Tenants who want independent living, they love this sort of layout. The bedroom, the bathroom, you know, the living area, the kitchenettes, they love that setup, right? Rather than sharing bathrooms in a typical 3 to 5 bedroom house sharing layout that people are out there marketing. And even if they have the bedroom, so you can see their bedroom, separate lounge room, right? Then you got a kitchenette, then you got the bathroom there, same thing again. Then you got the communal area up the top there, the kitchen, right? And then you've got the laundry, and this is the second unit, this is the third unit, fourth unit, fifth unit. So they're all identical. But that is what tenants are paying premium rents for, and they are extremely comfortable to live in. I've been inside one of them, and if you were a single person that needs a place that's affordable and convenient, this is it, right? It's a fantastic option. So the solution is make it appealing, right? Some of these, there's one for rent in Brisbane, $510 per week, including all bills, right? Because attractive design co-living and rooming houses, they will demand premium rents and higher demand, whether they're regional or city areas, it's the same thing. This is a very attractive little apartment, fully furnished, convenient, all bills are paid, bang, you know, they rent like hotcakes. So again, look at these designs. Look at that lovely little bar, that lounge room there on the top right, you know, with the courtyard. You got the TV on the wall. This design down on the left is a little bit different. Yeah, again, you can see the courtyard off to the right. You got the bedroom after the lounge room. You got the kitchenette on the left there, and the bathroom is right at the end. Another one here, same thing, the little courtyard there, the bedroom. This one looks like a accessible one because it's got a wide doorway to get a wheelchair through. And here's another one, right? Slightly different layout again. But I'm sure you'll agree, this looks like a normal home. It's not, doesn't feel like you're sharing a room with flatmates, you know, like you used to do when you were like, you know, 20 years old, when you were at university and you didn't care. The third mistake people make is just the wrong tenant mix or too many rooms, right, inside the property. Tenants, they need to be able to get along and have similar backgrounds. You don't want conflicts and problems. So too many tenants or bedrooms can lead to noise, overcrowding, cleaning issues in common areas, as well as other problems. We eliminate that completely with the design of our properties. They're soundproof, right? They all have different electricity circuits. So if somebody blows something in their room, it doesn't switch the whole light off, the whole house off, right? We have, you know, those PIN code on the lock, so they never can lock themselves out and lose their keys and have to ring us up at midnight. So there's a lot of things we do, and I can go through it with you in details, that make these truly unique and stand out from all the other ones that are in the market, and the tenants love it. So here's an example. Would you rather be renting in an 8-bedroom property, 245 meters squares total size? Now this is the layout on the right there. This was actually a property that's advertised for rent. 8 bedrooms, 8 bathrooms, but it's 245 square meters in total size. So imagine how big those bedrooms are going to be and those bathrooms are going to be, right? Now our design has 5 bedrooms and 270 square meters. So it's bigger by 25 square meters, and it's got 3 less bedrooms. So obviously there's a reason for that, right? Why don't we just cram 8 bedrooms in there, or 9 bedrooms we could fit in there, and then give you this pie in the sky rental figure that says, oh, you'll make 15% return or 17% return. Well, because it's unrealistic. Your costs are going to be way higher. You're going to have problems, and you might not even be able to let those rooms because, you know, adults, doctors and nurses and anyone, and professional people aren't going to live in a tiny little bedroom and share it with 7 other people, 8 other people. That's the reality of the marketplace. So the solution, less is more, certainly holds true, and it's in Ballarat there. That's where you've got the two areas, the 2 hospitals there, and then, you know, properties built in the right areas to accommodate quality tenants is the solution. Head lease with organizations needing to attract good staff and organize their housing, such as the one is in Ballarat, right, is the way to go. If you can get properties like that. And as I said, we only have very limited stock available of these with the guaranteed rent. So if you're interested, make sure you give me a call. Now, problem number 4, poor cleanliness and maintenance. Again, badly maintained and poorly managed properties will attract much lower quality tenants. Makes sense. Now, I'm having a bit of a joke there. Obviously, your house hopefully will never look like that. But you don't want even a little bit of rubbish, right? So the solution is it's important to have regular cleaning and maintenance in the common areas. Now, this is the common lounge there. You can see the common kitchenette and the dining. Now, the individual rooms, the tenants clean themselves. Their own kitchens, it's just like if they rented a whole house on their own. They are responsible, but the common areas and the gardens are all maintained by us. So you got to keep the overall property condition in top shape to attract those higher rentals and better quality tenants. I mean, makes sense. Good quality tenants wants to live in nice accommodation. I'm sure it's the same thing if you're going on a holiday and you're looking for hotels or Airbnbs or that sort of situation. You don't like staying in a dirty place. So the other problem is if you have bad or inexperienced property managers. Look, rooming houses, they are a bit of a specialist area. Now, they require just a little bit more hands-on management than normal rentals. So most agents can actually handle co-living, but they are a little bit more hands-on, so they tend to charge more. Right? So most people will charge anywhere from 10 to 11%. Now, the management that's going to be managing our properties is only charging 7.7% because they are also the designers and the developers of the property, so they're happy to do the management at a minimal cost, to the investor. So it's important to use property managers that are experienced in this area and that have a hands-on approach. Obviously, while we've got the 5-year rental guarantee, it's going to be managed by that company that built them. However, that's co-living. However, after that period is finished, we recommend you still go with them, obviously, but you can manage it through anybody that you like. It's only during the guarantee period that they're going to be managing it. There's no other option. So the solution, as I said, is the good property management and tenant selection is essential. You want good quality tenants. So next gen have their own expert property managers who will handle every aspect of managing your property, right? You can see the step-by-step progress there. They handle every step of the property management. The owners have had extensive experience in not only developing house and land packages. They've spent over 18 months working on this design and this concept. Right? They're only just bringing it to the market and they're making it's the right product for today. Right? If you get in today, you're getting 10.46%. If you wait 2 or 3 years, you'll be getting 8%. Because as the prices of those properties goes up, the returns will go down, and as the land price goes up as well. So let's talk about getting tenants. If some people have asked me, but what happens once the guarantee is over? Well, it's really easy to get the tenants. So I've actually done a little exercise here on how to get tenants for these sort of properties. And remember, I also wrote the book, How to Sell or Rent Your Home for More Money. So I know how to get tenants. I even send you my book for free if you're worried about being able to find tenants, because if you know how to do it, it's very simple.
All right, one of the questions we often get asked is what happens once the rental guarantee period is over? Or what if I'm buying a rooming house and there is no rental guarantee attached to it? Well, look, it doesn't really matter because these rooming houses are so easy to rent out, even you could do it yourself. Obviously, it's better if you have a specialist person because you don't have to manage them after they're rented as well, but they're not a specialized rental like NDIS or commercial, which also have very high returns, but you need really specialist contacts and specialist types of tenants. This will basically be rented to anybody who wants an affordable rental, right? And one price. So you get your Wi-Fi, electricity, everything is included. It's fully furnished, and you just advertise them on domain, .com, realestate.com. In fact, let's jump onto realestate.com and have a look at exactly what's advertised as far as rooming houses go and see what we can find there. Okay, so basically I've gone on to realestate.com. I've put in the Brisbane greater area because I know that there's some of these types of rooming houses for rent there currently. 1 bedroom, right? And look what comes up. Like a room like this. Obviously, doctors or nurses aren't going to want to rent that. This is a nicer room, but still it's just a bedroom, $310, right? Just a bedroom with a bathroom. And then you come across something like this. All bills are included, and look how beautiful that lounge room is. It's got a little, balcony, courtyards. So, it's got a kitchenette, fully furnished. That's another angle of that type of lounge room. See, there's another one. You can see the courtyard outside, a TV on the wall. And then you got the bedroom, which is a separate room, sometimes with a door, sometimes without, but it's a completely separated area. And look, there's a long shot view of that. So you've got a little dining table there as well, and then you've also got this would be the common area because there's a full oven there, and a couple of dining chairs. Sometimes they have a lounge as well. There's another bedroom, and of course bathroom and a shower. So again, really nice designs. Let's have a look at what they say about it to rent. 1-bedroom apartment in prime location, all bills included. Yeah, look at this. One room, one ground, courtyard, private car space with a car that are $30 more expensive. If they are, if they don't have a car, then obviously they're a bit cheaper. But it's everything's included: electricity, water, internet, all included in your rent. So that's basically how easy these types of properties are to rent, and they are the type of product that is ideally suited for the shortage we have currently in Australia. So literally, as I said, you could rent them yourself if you had to. It's that easy.
Okay, so that one in the example was renting for up to $420 for one of those micro apartments. And I'm sure you'll agree those designs are very, very attractive. It looks like a 1-bedroom unit. But as I said, again, it's the convenience of being able to move into fully furnished, Wi-Fi, everything's paid for. You don't have to connect anything, right? People love that convenience. It is a really, really good product for prospective tenants. So let's just summarize the benefits of basically investing in these rooming houses. For investors, rooming houses are an attractive proposition because of their high rental yield, often returning $90,000 to $100,000 and more per year, depending on number of bedrooms and locations. And they give you much higher rental income than the traditional single-family rentals, as they accommodate multiple tenants, in the one property. The shared living model also leads to lower vacancy rates, as the departure of one tenant does not equate to complete loss of rental income. So it's a lot more secure from you as an owner point of view. Once built and tenanted, rooming and co-living properties can give you an immediate capital value, and these increases can be anywhere from $100,000 to $350,000, depending on where it is and how big it is and how big the land is. Plus, you're getting very solid rental yields, which allows the investor to purchase more property faster. So the whole idea of investing in a property like this is that you will be able to invest more and buy more properties later because you got a positive cash flow. Right? Most properties drain your money, and that means you can't buy more property because the bank won't lend you any more money. These properties make you money. They generate positive cash flow, so that gets added to your income, and you can buy more property later on. So it's a win-win for investor and tenants, right? Because the tenants enjoy the simplicity and the predictability of their living costs, and the landlords benefit from the strong returns and the growth potential of their investment. So is today the best time to invest in rooming houses? What do you think? Is it? No, it's not. And it's the second best time, right? The best time was 3 or 4 years or more ago, because your return today could be as high as 18% on the prices you were paying back then. Just like that property on the Gold Coast sold in 2021 for $927,000, and in 2023 it resold for $1.6 million. The rent hasn't moved much, so guess what happened to the yield? The yield's dropped. That is what's going to keep happening. If you don't get in today, in another 2 or 3 years' time, the yield will be 8%, 7%. Right? So invest now. Today is the best time. It's the second best time, but you can't go backwards. You can only go forwards. So this is why you must start investing now, because the property price is still rising. There is a shortage of houses, builders and materials, and combined with the population growth through migration, that's going to keep pushing the prices and the rents up. Right? There's just basic, simple supply and demand equation, right? And the regionalists is where a lot of the migrants are forced to go to the regional areas as part of their visas. So that's why this kind of property is such an ideal investment, because they want something temporary, but something that's still attractive for them to be able to live in. So 2025 property prices look, historically, the last 140 years, prices have just gone up. So they're expected to rise by 4 to 6%. So the worst you're going to do is 4 to 6%, even if you had a normal property. But several areas are expecting higher increases, especially the regional areas. They're predicted to increase by more. You know, some of them even higher. There you can see the actual stagnation periods as well. So if the price haven't gone up, the times when they don't go up is getting shorter and shorter. You can see in the 1960s, you know, that there was a 7 years of no price growth. But here we've got like 4 years, 2014. It's the periods are shortening. If you look historically, back to 1894 when the record started, there was 27 years of no real growth. But that's not the reality of today because of the rising population and the demand. So it is the best time to invest today. So look, to summarize the whole thing again, the most secure and reliable wealth is to invest in high-income producing properties. There's no question about that. Anyone that's made money in property will agree with that. They are your ticket to your financial freedom and retirement lifestyle, right? So you just got to take the decision to do it. And there is a real shortage of really well located, design and affordable accommodation. So the rooming and co-living will give you a much higher return with less risk than virtually any other type of property investment you can get today. Right? The rents have increased and across Australia, right, this is, and making many standard rental properties unaffordable to single renters, right? There you've got that report that it's the worst rental affordability it's been. Like 30% of income is being spent on rent. Well, these properties allow an affordable option to those people that need the property to rent. Also, the rising population and shortage of houses has created unmet demand for all types of rentals. The numbers of single-person households is rising each year as well. You can see that it went from about 18% about 30 or 40 years ago to 25% plus, and it's rising all the time. So these types of properties are targeting that single household market and affordable with an affordable property. The rooming houses, they offer a very modern, affordable, and practical solution to the rental crisis that's across Australia right now. And this is the time to get in there before prices of them rise and the returns are going to drop. Your property should be tenanted within days or weeks of being completed with excellent returns possible. And look, including some properties, obviously, that have the benefit of the 3 to 5 year guarantee. The 3 we've got at the moment have got a 5-year guarantee. Not all the rooming houses have this guarantee. All come furnished. So again, you got to know what's included, you know, before you jump in. But there is an opportunity right now because of this unique situation that's arisen in some of the regional towns with the hospitals and the agreements that they have with those new builds, the new buildings. You can invest in cash, self-managed super fund or equity release, as I've mentioned before. Again, super fund is a great investment for these things because it's going to be tax-free. So that high income you're going to get, by the time you retire, you'll be getting $100,000 a year just from one property because the rent's going to go up with CPI. If you've got 10 years to retirement or more, then that income's just going to keep going up, and it's all going to be that beautiful word. I love that word. Tax-free. No tax once you retire. Right? So where to from here? Next steps from here. Look, get your questions answered. Give us a call. Right? Let's find out if a rooming house is the best solution for you and your goals. Determine your approximate financial capacity to purchase a rooming house investment in or out of your super. So what can you afford? We're going to have a look at that. We can have a look at that with you. All right? We want you to then complete an EOI, expression of interest, and authorize a $500 fully refundable holding deposit. Now, the EOI link is included below this video. It's also on our website, and it's simply your commitment to wanting to buy one of these properties. So we can then go to the developer and have a look at what's available in the market for the most suitable rooming or co-living properties still available, or what other options we might have for you. And then we come back to you with those options and other options that's still available in your price range. Obviously, you've got to be able to afford it as well. We would all love to buy a Rolls Royce, but if we can only afford a Hyundai, there is some cheaper options than some of these as well. We can also make an appointment with a specialist finance broker to determine if a rooming house investment is feasible for you, give you access to specialist accountants, tax specialists, and assist you in setting up your self-managed super fund if necessary. So we can recommend people to do that at a very reasonable cost. You also get access to all my educational webinars, my hot suburb reports, the high yield property updates. You can get a copy of some of my books. All right. Once you decide on a suitable property, there'll be a sales advice raised with the developer. An additional, usually around $2,000 deposit is paid to secure that property. They'll then take it off the market and they will generate the relevant purchase contracts in your name and also walk you through any documents and ID you got to submit for whatever you want the contracts in. Now, once you're happy with all that, it all makes sense to you, they then issue the contract documents for you to sign electronically or in person, and you then transfer the balance of the deposit due to complete the purchase, just like you would with any full property purchase. And then construction commences as soon as possible, and the property is expected to be completed on average within 6 to 8 months from the date of your investments and the land being registered and ready to build on. Now, let me run through that with you again in case you missed it. So number one, get your questions answered. Determine how much you can afford. Let's submit that expression of interest with a $500 fully refundable deposit. Then we'll find some property options based on what your financial capacity is. Number two, we'll make a specialist finance appointment for those types of properties. If you don't have somebody of your own or if they don't know how to finance this type of property. And they'll all say they will, but they might not be able to. So we've got a really good finance broker. We can also put you in touch with a solicitor and accountant for setting up your self-managed super fund and also your legals and your conveyancing. Access all our training tools and areas. Confirm property, pay the $2,500 deposit or the balance of that. And then the contracts are going to be issued and you can sign the contracts and then you pay the full deposit and the construction will commence. So again, book a session with us or with me or whoever sent you to this session or text me on 0403 468 753. I'd love to have a chat with you or meet with you if it's feasible. I know this is going to be the best investment you'll ever make. So make sure that you contact our office and have a chat to us about, whether we can find one of these for you, still with that 5-year guarantee and the free furniture pack worth over $25,000. We've only got a limited number of those, so make sure that if you're serious about growing your wealth and retiring financially free, get in today. I look forward to meeting you. That's me signing off. I'm going to run another success story of another client of mine after this, but until then, I'll see you later.
I've been following you for quite a few years and, like most people, I want to be able to retire comfortably and get the best returns on my investments. I'm actually looking to purchase another property that offered basically high returns and capital growth, and so sort of served all those main things for me. One was affordable, good returns and good capital growth, and I can see where those properties are located as well. Like you showed me on the map where those different properties were, so that allowed me to get involved with the process as well, which I liked. The information that you provided me was very detailed, which was great because I'm that type of person to want to know more about something before I invest in it.
Yeah.
Also, too, you've got a lot of property yourself, so that sort of made me feel more comfortable in the process. I've also bought property too, so yeah, I think it was a good match. And yeah, looking to get my investment back in 6 or 7 years.